Bitcoin just hit another major milestone, sending shockwaves through the financial world. But this time feels different. The forces at play could change everything for crypto investors. Are we witnessing the start of a new supercycle, or is a sharp correction just around the corner? The stakes have never been higher. Welcome back to Crypto Insights, where we break down the analysis you need to know. I'm your host, and today we're diving deep into 5 game-changing developments. We'll go beyond the price charts to explore the surge in institutional adoption, decipher critical regulatory updates, and analyze the on-chain data that professionals are watching. This is the strategic intelligence that could shape your crypto portfolio. But before we jump in, hit that subscribe button and ring the notification bell so you never miss a critical update. As a special gift for new subscribers, I'm giving away my exclusive Bitcoin analysis toolkit, completely free. It's packed with the resources and checklists I personally use to evaluate market sentiment and spot key opportunities. The link is in the description below, so be sure to grab your copy. Now let's get started with the first major development you need to know about. First up, let's talk about Bitcoin's current price action. As of today, Bitcoin is trading at levels that have caught the attention of both institutional and retail investors. We're seeing a tense battle unfold around a key psychological and technical zone, a price range that has previously acted as both strong resistance and reliable support. This consolidation period is critical as the market digests recent gains and searches for its next directional catalyst. The indecision is palpable, with both bulls and bears making their case. The recent volatility has been driven by several key factors, including regulatory developments, institutional adoption, and macroeconomic conditions. What's particularly interesting is how Bitcoin has been responding to traditional market pressures. For much of the year, it has shown a tight correlation with tech stocks, reacting to inflation data and Federal Reserve policy announcements. When the Fed signals a more hawkish stance, risk assets like Bitcoin tend to pull back. Conversely, any hint of loosening monetary policy has been met with a surge of buying pressure. This dynamic shows Bitcoin's increasing integration into the global macro landscape. Technical analysis suggests we're at a critical support level, defined by the 50-day moving average. The Relative Strength Index, or RSI, is hovering in neutral territory, indicating the market is neither overbought nor oversold, but rather coiled for a significant move. The next few weeks could determine whether we see a breakout to new highs, potentially triggering a short squeeze, or a deeper correction toward the 200-day moving average. Second, let's examine what the experts are predicting for Bitcoin's future. In a market this dynamic, forecasts can vary wildly, but they provide valuable insight into market sentiment. Some of the most respected analysts in the space have shared their forecasts, painting a picture of both short-term caution and long-term optimism. Cathie Wood from RK Invest maintains her famously bullish outlook, reiterating a price target of over $1 million per coin in the coming years, citing Bitcoin's potential as a global settlement network and a hedge against fiat currency devaluation. On the other hand, analysts from major banks like JP Morgan are more cautious in the short term, pointing to potential regulatory headwinds and macroeconomic uncertainty as reasons for a possible consolidation or pullback. Despite these differing short-term views, the consensus seems to be that long-term fundamentals remain strong. The core of this bullishness rests on Bitcoin's unchangeable monetary policy, a hard cap of 21 million coins. What's particularly noteworthy is how these predictions align with on-chain metrics and network activity, which continue to show healthy growth patterns. For instance, the number of wallets holding Bitcoin for over a year is at an all-time high, indicating that conviction among long-term investors is unshaken by volatility. These metrics, combined with the predictable supply shock from the Bitcoin halving cycle, form the bedrock of most long-term bullish theses. Third, regulatory developments continue to shape Bitcoin's trajectory. This is perhaps the most significant variable in the medium term. Recent announcements from major economies have provided both clarity and new challenges, creating a complex global patchwork of rules. The European Union's Markets in Crypto Assets Regulation, or MiCA, is now in effect, creating a comprehensive framework that provides legal certainty for crypto companies and investors across 27 member states. This is a landmark achievement. Meanwhile, the United States continues to work toward comprehensive crypto legislation, with an ongoing debate between the SEC and the CFTC over who holds primary jurisdiction. The outcome of this will determine whether Bitcoin is ultimately regulated as a commodity, like gold, or a security. These frameworks are creating more institutional confidence, as they provide the rules of the road that large firms require. However, some jurisdictions are taking a more restrictive approach. We saw this with China's ban on mining and trading, which initially caused a market shock, but ultimately demonstrated the network's resilience as miners quickly relocated. These restrictive policies could impact global Bitcoin adoption and trading volumes in the short term, creating pockets of regulatory risk. Fourth, institutional adoption continues to accelerate at an unprecedented pace. This is no longer a fringe movement, it's a full-scale integration. Major corporations and financial institutions are integrating Bitcoin into their operations and balance sheets. The US spot Bitcoin ETFs have seen massive inflows, attracting billions of dollars and providing a regulated, accessible entry point for a new class of investors. At the same time, public companies like MicroStrategy continue to add Bitcoin to their treasury reserves as a hedge against inflation. This institutional demand is creating a significant supply squeeze. With a fixed supply of 21 million coins, every Bitcoin bought by an ETF or a corporation is one less coin available on the open market. This dynamic could drive prices significantly higher over the long term. The shift from speculative investment to strategic allocation represents a fundamental change in how Bitcoin is perceived by traditional finance. It's now being treated as a legitimate macro asset, a component of a diversified portfolio. This has also spurred the growth of a robust ecosystem of institutional-grade services from qualified custodians to sophisticated derivatives markets, building the financial plumbing necessary for even larger allocations in the future. Finally, let's look at Bitcoin's network fundamentals, which remain incredibly strong despite market volatility. While price is what grabs headlines, the health of the underlying network is what provides long-term value. Hash rate, which represents the total computational power securing the network, has reached new all-time highs. Think of it as the network's immune system. The higher the hash rate, the more expensive and difficult it is to attack. This indicates that miners are more confident than ever, investing billions in new hardware for Bitcoin's long-term prospects. As a result, network security has never been stronger. Additionally, the shift toward renewable energy in mining operations is addressing environmental concerns. Recent data suggests over half of the network is now powered by sustainable sources as miners are incentivized to find the cheapest available energy, which is often stranded renewables. Furthermore, development on Layer 2 solutions like the Lightning Network is accelerating, enabling faster, cheaper transactions and addressing scalability concerns, paving the way for Bitcoin's use in everyday payments. So let's recap what we've covered today about Bitcoin's current state and future outlook. We started by dissecting the current price action, identifying key support and resistance levels. We then explored a range of expert predictions, giving you a full spectrum of what the pros are thinking. We also navigated the complex regulatory landscape, noting the global trend towards clearer frameworks, which could be a significant catalyst. Crucially, we examined the undeniable wave of institutional adoption, with major corporations treating Bitcoin as a legitimate treasury asset. And finally, we reinforce these points by looking at the unwavering strength of Bitcoin's network fundamentals, like its hash rate, which proves the network's resilience and security. Putting all these pieces together, a clear picture emerges. In the short term, we must be prepared for volatility. Geopolitical events and macroeconomic data can cause sharp price swings. That's the nature of this asset class. However, when we zoom out, the long-term trajectory for Bitcoin appears incredibly robust. The powerful combination of its fixed, deflationary supply, increasing regulatory clarity, and the steady inflow of institutional capital creates a compelling case for future appreciation. This isn't just speculative excitement, it's a fundamental shift in how the world views this groundbreaking technology. Now, it's crucial to reiterate that nothing in this video constitutes financial advice. The crypto market is inherently risky, and you should never invest more than you're willing to lose. My goal is to provide you with the information and analysis you need to think critically and make your own informed decisions. Always conduct your own thorough research. If you found this deep dive helpful and want to continue receiving this kind of in-depth analysis, please take a moment to subscribe to the channel and hit that like button. It truly helps us grow and continue creating valuable content for you. And to help you on that research journey, don't forget to grab your free Bitcoin analysis toolkit by clicking the link in the description. It's a curated collection of the exclusive charts, indicators, and research tools that I personally use to stay ahead of the market. Speaking of staying ahead, you'll want to be here next week. We're tackling one of the biggest debates in crypto, Ethereum versus Bitcoin. We'll go beyond surface-level arguments and do a deep dive comparison of their technology, ecosystems, and potential to dominate the market in 2024. You won't want to miss that analysis. Thanks for watching, and I'll see you in the next video.